Every single day, over $7 trillion moves through the world's markets. $7 trillion in one day. That number is so big it is hard to even imagine. But here's the thing nobody tells you. That system, the one moving trillions every day, it was not built by banks, it was not built by governments, it was built by ordinary people, just like you, trying to survive. It started with a farmer who had too much wheat and a neighbor who had too many cows. That simple swap, thousands of years ago in ancient Babylon, was the very first trade ever made on this planet. From that one swap grew the Silk Road. From the Silk Road grew the world's first stock market. From that stock market grew Wall Street. And from Wall Street grew the phone in your pocket that lets you buy a piece of Apple or Tesla in 3 seconds flat. This is that full story. From the very first grain trade 5,000 years ago, all the way to the digital markets of today. And by the end of this video, you will understand something that most people who trade every day still do not know. The market has never changed. Only the people playing it have. Let us start from the very beginning. The year is 3000 BC. That is 5,000 years ago. People back then had no money, no banks, no apps. But they had a simple problem. A farmer grew wheat. He had too much of it. His neighbor had cows, more than he needed. So they made a deal. I give you wheat, you give me milk. Simple, done. That is called barter. And that was the world's first trade. But barter had one big problem. What if the wheat farmer wanted fish? But the fish man did not want wheat? The deal could not happen. Everyone was stuck. So around 600 BC, people in Turkey came up with a genius idea. Instead of swapping things directly, what if everyone agreed that small pieces of gold and silver had a fixed value? You could use gold to buy anything. The seller did not need to want your specific item anymore. Gold was accepted everywhere. That was the birth of coins and the first real currency. Instead of carrying cows to the market, you carry coins. Much easier. Now merchants could travel far, from China to India to Persia to Rome, along a huge trade route called the Silk Road. They carried gold. They bought and sold goods. And slowly trade became global for the first time in history. Jump to 1602, Amsterdam, Netherlands. A company called the Dutch East India Company, let us just call them the VOC, wanted to send ships to Asia. The plan was to bring back spices, silk, and gold. Huge profits were waiting, but there was one massive problem. Sending ships to Asia was extremely expensive and extremely dangerous. Ships could sink, pirates could attack. The whole investment could be lost in one voyage. No single person could afford to take that risk alone. So the VOC came up with an idea that nobody had ever tried before. What if we cut the company into thousands of tiny pieces and sell each piece to regular people? Everyone puts in a little money. Everyone shares the risk. And when the ships come back with profit, everyone gets their share back. This idea worked perfectly. Thousands of regular people, bakers, teachers, carpenters, bought pieces of the VOC. For the first time in history, ordinary people could invest in a big company. The Amsterdam Stock Exchange opened in 1602, the world's very first stock market. The idea spread fast. By the 1700s, London traders were meeting in coffee shops, shouting prices at each other. In 1801, they made it official and called it the London Stock Exchange. And in America, 17 traders met under a big tree on a street in New York in 1792. Their simple handshake agreement became the New York Stock Exchange, the biggest stock market in the world today. But markets are not always calm. Sometimes people get too excited, prices go up too fast, and then crash. Let us talk about the first bubble in history. It involved tulips. Yes, flowers. In the 1630s in Holland, people went crazy for rare tulips. Everyone wanted them. Prices kept going up and up. A single tulip bulb, just a flower seed, sold for more than a house. People borrowed money to buy tulips, thinking prices would keep rising forever. In February 1637, the tulip bubble popped. Prices crashed by 99% in just 1 week. People who borrowed money to buy tulips lost everything overnight. The world's first financial crash had happened. The biggest crash in history came in 1929. It was called Black Thursday. The New York Stock Exchange collapsed. $30 billion was wiped out in days. Banks closed. Businesses shut down. Millions of people lost their jobs. It triggered the Great Depression, a period where the whole world economy suffered for years. Then in 1971, computers arrived in trading. NASDAQ launched as the first fully electronic stock market. No shouting on a trading floor, just computers buying and selling automatically at incredible speed. Then came the internet in the 1990s. Everyone got excited about new internet companies. Investors poured billions into websites that had no products, no customers, no profits, just a web address. In 2000, just like the tulip bubble, it all crashed. Billions disappeared overnight. So where are we today? From your phone, you can buy a tiny piece of Apple, Amazon, or any company in the world in seconds, for free. In India, we have the NSE and BSE, two of the biggest stock exchanges in Asia. Millions of Indians trade every single day. And the number is growing fast, especially young people under 30. Today, computers called algorithms do most of the trading. Powerful programs buy and sell millions of stocks every second, faster than any human can think. In trading, algorithms watch prices and automatically buy or sell when certain conditions are met, all without a human pressing a button. And now cryptocurrency has arrived. Bitcoin, Ethereum, digital currencies that exist only on computers. No government controls them, no bank manages them. It is the newest form of trading, and it is still evolving. From a farmer trading grain 5,000 years ago to someone in Chennai buying Bitcoin on their phone, it is the same basic idea. Find something valuable, find someone who wants it, make a deal. That is trading. That has always been trading. The market has always gone up and down. It has survived wars, pandemics, crashes, and collapses. Every single time, it recovered. Because as long as humans want to create things and sell them, there will always be a market. If this video helped you understand trading for the first time, hit that subscribe button. Every week, we bring you the real stories behind the markets. Next week, the story of one man who made $1 billion in a single day by betting against an entire country's currency. That man is George Soros. See you next week.